Welcome to Money Talks. I'm Genevieve Westcott with your latest financial news from across New Zealand and around the globe. Coming up, spotlight on China and how New Zealand can do bigger, better business than ever before. We meet one of the big players on the board of the just-launched New Zealand-China Council. Why this think tank is determined to make friends, make business. Joining me today is Tim White, KPMG's lead partner for China business, as well as chair of the New Zealand-China Trade Association, and now a new board member of the New Zealand-China Council. Great to have you on the show, Tim.
Nice to be here, Genevieve.
All right, now listen, let's talk a little bit about this new council. There are so many of them floating around. Why is the government getting involved in yet another think tank?
Well, I think there's a misconception that it is government-led. So it's actually a partnership between government and the private sector. And really what it's intended to do is to bring together the various parties that are involved with the Chinese relationship, whether that be economic, business, and bring those together and get a bit of alignment.
Now, we've had diplomatic relations with China for 40 years. Is this an indication that perhaps we're not doing so well when it comes to the business side of things?
No, I don't think so. China is evolving. China's opening up. China's growing. It's becoming a much more important part in the world. It's playing a key economic role. It's playing a key political and strategic role too. And I think the importance is not lost on New Zealand, and this is an initiative to further that relationship.
And this is just the latest step, as I understand it. The government launched its New Zealand Inc. strategy in February of this year. What do you hope to achieve in year one?
Well, there's huge expectation around this council. So in the first year, really, it's about getting up and running. It's about getting a partnership forum underway in China, so high-level conversations, and part of that will be a prime ministerial visit in early December. It's
being described as a political and business who's who operating at board level, including yourself. Who are some of the other heavy hitters you have up your sleeve?
Well, I think I'm one of the few without a title. So it's, of course, led by Sir Don McKinnon. Dame Jenny Shipley is on the board as well, as is Sir Graham Harrison, Professor Sir Peter Gluckman, John Allen from MFAT is also on there.
Let me ask you as a business guy now, we've had a free trade agreement with China for 4 years. On a scale of 1 to 10, 10 being fabulous, 1 being pretty darn hopeless, how do you think we're really doing?
In terms of the free trade agreement, well, I think there's also a misconception out there that the free trade agreement has driven the trade, the growth in trade with China, and I don't believe that's so. I think it's an enabler. It helps. There was a recent report out by New Zealand Trade and Enterprise which suggested that we're still leaving about $90 million on the table in respect to the free trade agreement. But I think what is driving the trade is China. It's not the free trade agreement. So I think people need to understand that is the case. It's something that makes it easier, potentially, but it's not driving the growth.
And from your point of view, what are the current success stories that Kiwis can look to as to companies here that are doing well in China? What's working really well?
Well, I think rather than sort of naming names like Fonterra and Lanzatech, I think it's important to understand what the critical components are of success in China. And you know, it's not rocket science, but it's really about understanding. And most of us don't understand the way that Chinese do business, the culture, and it's really getting underneath that and really understanding it, which allows you to understand why they do things in the way that they do. It's about long-term relationships. It's very strategic. They're much more strategic, in my view, than we are. And so it's building those relationships, really understanding what they want. Like any business, it's understanding your customer, and it's not just the business, but it's right at the top level with the 5-year plans and how that cascades down. What is the government trying to achieve for China? So those things are critically important.
How important is agribusiness in this scheme?
Well, agribusiness is critical, of course. If you look at the last, since 2008 with the downturn, agribusiness really has been the backbone of the New Zealand economy. I mean, it always has, but really the relationship with China and agribusiness is huge. But we need to understand too that is really around the infant formula.
So what's wrong with that?
So it's fine, but I think there is a bit of a sense that we're putting eggs in one basket. So there's real focus on China. So one customer, if you like, one product. So that creates some real risks, I think. And in Australia, it's no different with their resources. I think we're probably slightly better positioned than them in terms of China's slowing, but it's still a risk. And I think we need to understand that diversification away from that is also important.
What do you think has held companies back from plunging into China the way Fonterra has?
It's big. It's got a big balance sheet. It's got people. It's it can make traction. New Zealand companies are small. Our sectors are fragmented, generally, and very, very difficult to look at a long-term strategy. To spend time in a market knowing that you're going to look at a sort of return in 3 years or 5 years. That's a big investment for a little company.
Tim, what characteristics are companies going to need to exhibit if they really want to start selling more to China?
Currently, for those of you who spend time in China, you'll understand there are massive issues with the environmental challenges that they've had with this extraordinary level of growth. And I had the opportunity a couple of months ago to meet with the Premier with a small group, and we put a number of questions to the Chinese Premier. And one of those questions was, what are your challenges? What do you need outside help with? And right at the top of his list was the environment. So everything he said was really couched in this environmental challenge that they have. And so that flows out from the 5-year plan as well, and it's saying that is critical. So there's a real focus on that. There's a real focus on healthcare. How do they deliver healthcare services to this population? Social services, those sorts of things. And those are sorts of things that they're really interested in. Now, in terms of agribusiness, food security is still a major issue, and it will be for a long time. And I think as the economy slows, that will create some more challenges for that sector in China as well, which will create opportunities for us.
We'll talk more about those opportunities when we come back. Thanks, Tim. Coming up after the break, China cuts back on growth and cuts back on cars big time as it battles to curb pollution. And Asia now has more than 1 billion internet surfers, and half of them live in China. What are they using it for? Can we sell more online? But first, the IMF has released its latest forecast for global growth, and it was nudged lower for most parts of the world. So answer this in our Farmers Facts and Figures quiz. What percentage is the IMF picking for global growth in 2012 and 2013? The answer when we return. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, what percentage is the IMF picking for global growth in 2012 and 2013? Global growth is expected to measure 3.5% this year and 3.9% next year. According to the IMF, the global economic recovery is still at risk, and Eurozone economies remain in a precarious situation. Joining us now is former chief economist for the BNZ turned director of financial focus, Murray Weatherston. Murray, good to see you again.
Likewise, Genevieve.
And you're fresh off a plane from Australia. Where were you, and what can you tell us about the economy over there?
Well, I was on an hour trip to Port Douglas, which was a nice little place to go and visit. So we did all the touristy things there. The Australian economy, I think, is starting to stutter. It has been two-paced. The mining sector has been very strong, and the rest of the domestic sector, the domestic economy has been relatively weak. But overall, it's the mining sector has held the economy up. Now it looks like the mining sector might be slowing down a tad, and of course the domestic stuff isn't actually picking up as much, so that overall I suspect the Australian economy is going to be a bit weaker than what it was.
And that's not good news for us.
No, because they're our major trading partner. We get lots of exports to there. If they slow down, it's definitely bad for us. They've
had an awful lot of job losses lately too, which surprised even the watchers over there.
Yeah, I've got a client who's been working in an aluminium plant up in northern Queensland, and I got a call from the other day to tell me that they've just been made redundant. Rio Tinto has decided to mothball the factory, mothball the plant for a while. and clearly, if the mining sector doesn't go well, jobs will be shed pretty quickly. They're pretty ruthless over there.
Yeah, and I'll tell you what, Rio Tinto, when they start to feel the pressure of the global financial situation, look out. Yeah. They're pretty big.
They are big.
Yeah, yeah. Now, we've been talking about China with Tim. What are your thoughts about China and our place within it under the current circumstances?
Well, you've got to say, China's potentially, 1 billion consumers. There's something like 100 million in the middle classes. So that's a pretty big market. I always remember when Lion Breweries decided they wanted to break into China, their view was basically if we could sell 1 can of beer to each Chinese person each year, we would sell one heck of a lot of beer. And I think it's the numbers that actually get people involved. New Zealand as a market's 4 million people. China's 1 billion people. That's 250 times as large. And clearly you want to sell where there's a big market.
China remains our 4th largest trading partner. But I wonder, Tim, does that make sense? Just because there's so many of them, we'd simply have to sell one product to everybody who lives there. Is that going to work for us?
I think we've moved on slightly since then, and I think that was probably one of our early learnings, I think, that particular one. But I think the way we normally look at China is China is really a number of different countries. I mean, they've got different rules for different parts of China. So you can't engage with China as a country. You've got to engage with China as cities or potentially provinces.
What makes it also very complicated is that the rules and regulations with so many levels of government change almost daily. Even the experts have got to be confused, correct?
That's right. And, just simple things like customs, for example. We've had cases where, for example, we've had a client who says, we've been selling this into this particular port for years, 10 years, and suddenly it's getting stuck there, and we don't know why. And it'll be simple things like the way the documentation is put together, same documentation, but maybe it's back to back, or it used to be back to back, and now it's on 2 pieces of paper. And there'll be simple things like that will slow things down. And just different rules, different interpretation, and that's probably one of the biggest issues is the interpretation at different ports.
I wonder too, we're not exactly leading the world when it comes to broadband, shall we say. And I was fascinated to hear this week that Asia now has more than 1 billion internet users. More than half of them are in China. Is this something that we've really got to come to grips with?
Well, I think lots of businesses haven't come to grips with the internet at all. You've really got to target what you do on the internet. It's pretty easy to put a message up and it goes wherever it goes. But unless firms have a decent strategy of actually how they intend to use the internet. I mean, given that we're selling agricultural products largely into China, I've got to struggle to see how it appearing on the smartphone of a Chinese person in the street in a city, how that actually would help.
Yeah, with more and more of the Chinese particularly, they're way ahead of the world in how they use smartphones, for example. They're doing things that people here don't do at all. Are we ever going to be able to catch up and be able to offer them what they want? This is a challenge for your council, isn't it?
Yeah, I agree with that completely. I think one thing that's really useful to point out is that while the Chinese are using the internet to find things, the Chinese are actually buying stuff, which is the most important thing, and they're buying more than other countries. So what I mean to say there is that, while Americans, for example, will surf and look around and some will buy, a greater percentage of those surfing in China will actually buy. So it is a great medium to use, a great channel, but again, you need to use it in the right way to reach the right market.
I want to know a little bit more about your personal visit with China's premier. What did you make of the guy, and share some of your insights? I know pollution there now is a big concern for them, and in fact in Guangzhou they just shut down how many people could get new car licenses because they were so worried about it, and apparently the car yards were kept open all night. That had never happened, and everything was sold. That's incredible. China worrying about the environment?
Well, if you look at the cars in that that incredible situation where they're selling cars all night because of the rules. I mean, it's incredible to us, but it's not incredible in China. And China has the ability to change the rules, as we've alluded to previously. And things like that can happen. I mean, to get a car on the road in Beijing, for example, is difficult. So they're trying to reduce the numbers of vehicles on the road. Pollution is a huge problem. Now, when I met with the group with the Premier a couple of months ago, now everything was couched in the environmental situation, and that is one of the key issues that they've got. And you can see it wherever you go, and even when you go to the big cities like Beijing, for example. You know, it's a lovely, clean city. It's very orderly, lots of people, but you can see the pollution.
Yeah, and China is home to 16 of the world's 20 most polluted cities. So maybe there's an opportunity there to do some real business.
Tell me what the business is.
Anything environmental that could help them, surely.
Yeah, the question, though, for all that is, where is New Zealand's expertise in, pollution reduction? I mean, New Zealand doesn't have, by and large, its own pollution problem. We don't have heavy industry. We've got climate that, our geographical position means the winds blow most of the stuff away. We actually have no first-hand experience of pollution control, on the scale that they've got, to actually sell anything to them.
But maybe that's an area we should be looking at. I know the New Zealand Super Fund has invested I think $100 million into infrastructure in China, things like industrial gas companies and solar-related businesses.
Yeah, but they're investing into companies which are benefiting from the growth in China. Companies that are growing in China, they're very keen to invest in. I'd be very surprised if any of those were, anti-pollution device companies. It might be that New Zealand businesses actually have had historically difficulty going into Australia. Now, Australia shares a common language with us. We have common laws. We have pretty common systems. New Zealand businesses struggle to, break into Australia. China is a whole different level of magnitude. They're effectively a command economy. They do business differently. The language is different. One shouldn't underestimate the difficulties that anybody's going to have of actually breaking into a Chinese market. And the thing that I read about all the time is that relationships are very, very important, and you've just got to spend the time to build the relationships, and then it happens. And I suspect what Tim was talking about before, if somehow it breaks down, at the customs, it's broken down because the relationship's actually broken down somewhere else, and someone's had a word to somebody and said, hey, let's teach these guys a lesson, let's hold it up at the port until they do it our way again.
Coming up after the break, future proof on the highways and byways of the economic world, as our experts point out what's coming up. But first, the government will invest more than $11 million in a beef partnership designed to boost export meat sales, including some to China, I'm sure. The primary growth partnership will fund half of a program worth nearly $24 million, led by Brown Rig Agriculture and First Light Foods. So answer this in our Farmers Facts and Figures quiz. What will the latest $24 million PGP in beef produce for those millions of dollars? The answer when we come back. Stay tuned. Welcome back to Money Talks. Just before the break, we asked you, what will the latest $24 million worth of PGP in beef produce for those millions of dollars? High-valued marbled beef for premium export markets. And now it's time for Future Proof. What's coming up for our experts? Tim, tell me more, though, about your trip to China 2 months ago and meeting with the Premier. We've talked a little bit about the importance of relationships and the difference in cultures. What did you notice that maybe surprised you?
I was there with a group of people from other countries, if you like. And, there were situations where, for example, we had a senior person from, I think it was a South American country, who put a question to the Premier, which was, we've got a population of 60 million. How does a small country like ours deal with China? And that really made me start to think. And one of the things that came through very clearly for me was that China views the world in terms of continents. So it'll engage with countries on an individual country basis. However, when it's looking for opportunities and it's looking how to engage with the rest of the world, it appears to be looking on a continental basis. So it looks at South America, it looks at North America, it looks at the Middle East, it looks at, and then you think about New Zealand and Australia. So Australia is a sort of continent in itself. And New Zealand really doesn't get a look in when you start to look at the world in from that sort of perspective. So we've got a real challenge around how we actually get the attention of China and create noise.
So any thought to talking to the Aussies to get them on to your latest council to see if there could be an Australasian council perhaps?
That's actually a very interesting point, although we've got two vastly different approaches to China, if you like. So they've focused primarily on the resources. Ours has primarily been focused on the agricultural side of things. That's not to say that Australia's not doing business from an agricultural perspective with China and that we're not doing any resource business. But I think we're quite different, and that would be a real challenge, and I think there would be a lot of competition. But it's worth it.
And Tim, speaking about the Premier, I see that his latest word out of China for the rest of us is that growth continues to slow there, and he's saying that things could be kind of dicey there for quite a while. What's your take on it?
Well, if you're growing at 7.5%, for them it might be slow. For us, that would be nirvana.
Yeah, but any slowdown can't be good for places like the U.S. and certainly Europe, especially with the car situation. If they're, that's really going to affect things, isn't it?
Yeah, but they're probably going to be slowing down because, Europe slowed down and America's slowed down.
America has certainly slowed down. Let's look at the corn crops in big trouble because of the droughts. Unbelievable. They're burning up, and that's going to cost the world.
That's right. You just can't do anything about the weather. You've just got to face, if there's droughts, there'll be less corn, the price will go up, there'll be substitution away from corn onto some other products. Next year, it may be, the opposite problem. Maybe, boomer crops, price will drop again.
So you're relatively happy with the way China is tracking?
Look, it would be better if it was growing 0.5% faster, but at the rate it's growing, I think that's fine for the rest of the world.
And what about the Eurozone? What's hot and happening there, Murray?
Well, they just seem to go from crisis to crisis. When yesterday's elastoplast wears out, they just have to whack another one on. And it seems they haven't solved the fundamental problems. Greece is still a court case. Spain is a court case. Italy's been downgraded recently. It just continues on, and until I've actually got no idea how it will all sort out. The level of debt is enormous. There has to be some losses taken somewhere, but it's not, unless a crisis occurs. I think it'll just continue on for some considerable period of time.
Okay, coming up over the next 7 days, what are you going to be keeping your beady eye on, Tim?
Well, I think the information coming out of China is really critical. I think the impact of a slowdown in China, potential slowdown in China, is huge potentially on Australia, and that subsequent impact on us is important. I think that China has already said that they want to slow things down, that they want to refocus the economy away from exports to internal consumption. And so that was in the plan. So there's absolutely no doubt that they've tried to slow things down. They've, over the last few years, they've sort of averaged 11%, and in terms of GDP growth, but with a target of 8%. So they've always overshot. Now they might be getting it about right. There are some challenges around internal consumption, and I think the uncertainty that's currently there will dampen that down as well. So that will create some issues. I think that over the since 2009, with I suppose the way the government has been spending around infrastructure to keep that economy going, I don't think they're going to do that now, and I think that's going to create some challenges as well.
So watch this space. It ain't over yet, baby. Thanks to my guests, Murray Weatherston and Tim White. Be sure to check out our website at country99tv.co.nz for the latest updates on rural developments here and abroad. Meantime, spare a thought for the motorists in that morning rush hour in the Chinese city of Taizhou. driven quackers when a local farmer decided to walk his 5,000 ducks along a main road so they could feed at a local pond.
They drove drivers quackers, but walking 5,000 ducks along the road apparently has a purpose. So says the Chinese farmer behind the bizarre duck march anyway.
The duck eggs and the duck meat will taste better if I raise them in a wild way.
Not all drivers got in a flap about the waddling roadblock. This guy thought it was quite funny and liked the fact the ducks got out the way whenever a car tried to squeeze past. Farmer Hong Ming-soo has been herding ducks for 40 years. He always manages to keep his ducks in a row and has hardly ever lost any during these walks.
Keep the faith. See you next time.